In this video, I'm going to reveal to you the strategy that I use personally for trading. It has been there for long, and it's one of ICT strategies that work almost every single day. They happen in even low time frames. You could encounter really profitable trades. So stick around the video. See you after. Hi, I'm Henry and I'm a Ugandan trader, age 21. So in today's video, I'm going to show you my secret strategy that I use, and it's nothing other than the ICT power of 3. So make sure that you watch through the whole video in order to understand how to use it, because I'm going to show you the top-down analysis. So now you can really use this strategy in order to increase the high win rate of it. ICT himself uses this. This one is like his best strategy. So make sure that you watch the whole video in order to understand the thing very well. I'm going to show you the entry models you can use in this strategy, and hopefully it works for you. So after the video, you can backtest it as many times as possible in order to really know that this will work for you. But otherwise, I really think this will work for you. Okay, without wasting your time, let me jump straight into the video. Okay, so it works on basically 2 time frames. For every pair, it occurs every single day. So why am I saying that this one happens every single day? Because every candle has this strategy. Okay, so the strategy I'm talking about is power of 3. I know you have heard about it. You have heard that it really works out. It does, in fact it does. So let me pop into my charts and then I show you the trade that I took out. Okay, so normally I do trade the Euro USD. It's my favorite. Okay, so let me show you how actually the strategy is. Actually, I got to trade this trade setup you see over here. I use the strategy that I'm going to show you right now. See, let me measure for you the pips. You see, I rewarded myself with 51 pips for this strategy, and was ready to lose just 10 pips. Okay, here is the strategy. So basically, we have 3 phases in the market. So we have the accumulation, where the market is actually like consolidating. After accumulation, we go to manipulation. Then from the manipulation, we go to distribution. So it goes down, big moves, and then from the distribution we go back to the accumulation phase. So what brings about this? In the accumulation phase, which is right here, just right here, this is where our price normally does the consolidation. This is the opening price. So in the opening, when the price opens, normally we start with consolidation. If you know the ICT paradigm, you're pretty familiar with these terms. So from consolidation, we go to from accumulation, we go to manipulation, which is right here, over here. Just a simple move up so that we gather liquidity. Okay, let me give it orange. So what happens actually in the manipulation? basically when we leave the consolidation, most of the time literal traders will know that the price is going to continue pushing in that direction, which is not true. Let me show you what they would consider. So literal trader would see if we have consolidation and then price breaks above, they think it would retest and then continue up. It really does that. In most cases, this manipulation happens to sweep liquidity over here, and then this manipulation move will gather liquidity from this accumulation phase, and then we have a nice distribution down, which is right here. Okay. So this is a distribution phase up to around here. Maybe let me give it green. Okay, so after the distribution phase, we go back to the accumulation. Distribution phase is after having taken liquidity from the retail traders, we now take the market drives to its right direction where it has to go. So basically after the accumulation, we also go back into, after distribution, we go back to the accumulation phase once again, which is seen right here. Oops. Which is the same thing right here. Okay, so this is just one candle. As you can see a candle. So accumulation, manipulation, and then distribution. So I'm going to show you how this one actually occurs. So basically we get to use 2 time frames. For example, if you're an intraday trader, you would basically use the daily, and then from the daily you drop down to the 15 minutes time frame. It is 3 time frames, from the daily to 15, and then from the 15 then we go to the 5. So basically that's where I enter my trades in. That is for a daily trader, intraday trader. And then we have this kind of trader that would hold position. So for a swing trader, you drop in weekly time frame. From the weekly, we head to the 4H. From the 4H, we head straight to the 15M. From the weekly to the 4H for 4 hours, and then from the 4 hours we go to the 15 minutes. So this could be your bread and butter. This strategy works well. It has nice delivery. I mean, look here. If I had gone up to here, up to this low, this would have given me around 82 pips. So guys, you wanna try it out? Okay, so now let me go into it so that I may discuss it deeper. Okay. So let me show you on this particular trade that I took for this good profits. Let me remove them. So this was for the daily. I traded it on the daily. So I'll drop down in. I'll first go to daily as my high time frame for this setup. And having gone into the daily time frame, I look out for this candle, for 2 candles. So there is this candle over here, here. So this candle swept this low, the low of this candle. We use 3 candles. So if this candle sweeps the low of this, that means, the wick of this, the lower wick of this, that means that the price is likely to go down. You can see this, it happens most of the time, like literally every time, every day, every single day, every day. Most of the candles have candle wicks, so that means you would have a setup. So after having swept this low, I go on the next candle, I draw a line up to that. So now this is the opening, and now I'm dropping to the what, to the 15 minutes time frame, and then I show you what to do. Okay, so for example, let me mark this closing also as well. Let me give you trade. Okay, so after that I drop to the 15. So when we drop to the 15 minutes, there is a lot that you will see, that you observe. Okay, so this is our opening, this is where the candle opened from, and now we have, first of all, this high. We have this high, we have liquidity there, and then there is this internal liquidity over here, which is a fair value gap. So definitely, normally price would take out external range liquidity, or it would go into the internal range liquidity, then delivers. Okay, so for this one, we just took out the internal range liquidity and then price delivered. This is not what we should focus on, okay, as of now. So this is the opening price consolidated, and then it went up, taking out some, and then in the retail man said that they thought that price would continue going up, and look, so there are buy stops over, their stop losses were actually here, some of them were here. After having gone up, we had the market structure shift over here, this candle. So definitely we would look for another block, which is right here. So my entry would be here. Yes, I can place my entry over here, but now for me, I didn't enter from there, I entered somewhere here. So I enter in around there. My stop loss would be just above this high, and then my TP would be, I look for liquidity areas. So there is one here, just around these equals, relative equals, and then there is some liquidity over here. All those are take profits, and then there is full liquidity here. I would hold this for long. So this is basically my target, and you can see my TP was hit successfully. Guys, look at this delivery over here. So when I drop down to the daily time frame again, so we also have this one. Since this took out this candle took out the low of this one, I can mark it out as well, and then maybe I use blue for this week. There we go. Okay, so the same thing, you drop down to the 15 minutes time frame. Okay, so here is a clean move, power of 3, as I told you guys. So right here, this is where the price opened from, and see, it took off this high, and then when I look back here, there is this fair value gap here. So price retraced into this fair value gap, taking out some orders from here. It would have gone here anywhere, just anywhere, but well, it just took only this fair value gap. So maybe if you had some sell limits over here, you would have actually timed this trade perfectly. So after having did the manipulation, so this is the manipulation period, just from here up to here. So now the retail traders were like, so the price is going to keep pushing up, and then maybe their stop losses will be here. So and then if I drop down into the 5-minute time frame, you can see there is a fair value gap here. So I would take my entry right here on this fair value gap, and then I target my stop loss will be just above this, and then target areas of liquidity. So I go back in the 15-minute, I look for the areas of liquidity. One is here, so that was it exactly. So there are a few areas of liquidity, but you can make 1 to 4 or to 5 anywhere, like something that is good. So this is actually good, as guys you can see it made nice delivery. From here up to the low of this, let me show you. If I entered up to this low, you can see we have a range of 153 pips. So guys, you can see this, the thing that I told you, accumulation. This is the accumulation phase, manipulation, and then distribution phase. Back from this distribution phase, we are back into the accumulation again. This strategy works well. You can backtest it as many times as possible. I'm pretty sure you're gonna get nice results. Okay, so let me give you one more example on maybe, yeah, I'm doing the weekly time frame now. So this is the 1 week time frame. So over here you can see this, the low of this candle was taken out. So we can think that if this one is taken out, so we can anticipate that price is going to go bearish for the second one. So after that, what do? I draw the line on this week right there. So what's next? Let me color this green. So this is the opening price. After that, you drop down to the 4 hours time frame. In 4 hour time frame, it's here. Let me not confuse you guys. So in the 4 hour time frame, we see, so this was the opening, price consolidated, you can see this high took out this liquidity from here. Actually, it's hard to get where the liquidity, where the manipulation can go up to, but you might look for areas of interest. For example, maybe these equal highs might be good areas of liquidity. Anyway, you just have to look through. So after having taken out the liquidity, I told you guys you drop into the 15 minutes time frame. Okay, so for this one there is no actually good retracement, but there is this fair value gap over here. So I went short. I can go short from here on this fair value gap. Then I look for areas of liquidity. Unfortunately there's no, but maybe I can take this. This would be enough. A very good delivery downwards. So basically for this strategy, you don't normally, price normally delivers, well, it doesn't normally consolidate during the delivery time. It delivers without making a lot of consolidations. Okay guys, so thanks for watching. Hope to see you in the next video. So in the next video, I'm also going to be introducing new strategies of ICT, the ones that are easy to understand and make you profitable in the long run. Okay, thanks for watching, and hopefully that you like this video. Subscribe to this channel in order not to miss my new videos that I'm going to be dropping almost every week, and then share to your friends in order for them to know about me. They might also require the knowledge that I give in this channel. Okay, so this strategy that I've given you today, try to backtest it. You'll find it that it happens every single day, every single time you get setups. Okay guys, peace.